All right, what's up, everyone? This is Tyler from Team Let's Eat, Wall Street Group, FX Group, bringing you another weekly analysis for the week of Christmas. So December 19th through the 25th. Merry Christmas, everyone. A lot of people are taking breaks, slowing down. Um, but we're possibly slowing down a little bit, but we still have some opportunities in the market that we are going to take advantage of. So this week, I'm looking at gold, pound New Zealand dollar, and a little bit of the pound Aussie. So we'll just get right into gold. On the daily, actually, yeah, we'll start on the daily. So on the daily, we could see price has tapped these highs of 1814, which is what we totally expected. We actually we had the high of that wick and the high of this wick. And what we were watching last week was when price tapped into this level, we were going to short it. And we did get that short opportunity. Most of that was closed by the end of the day Friday. However, I think we're going to have a nice continuation down towards the lows of this daily candle right here. And from then on, we will reassess and see what the next move will be. So as you can see, we have some massive rejection here. And typically every time we have some massive rejection, the next day candle will come up and make a decent wick before it continues down. So like, for example, take a look at this wick right here, right? Massive wick. Next day, it comes up. So let's measure this wick right here. 60 pips. Okay, then it dumps all the way down here. You could probably close the trade. But look at the next day, right? We open this, it comes up 250 pips, and then it comes down 380 pips in the same day. And the following day, same thing, huge wick up, and then we continue down. So based off of that, I am expecting some sort of wick to form. We have the high of this daily marked here. So let's go in the 4-hour and determine the next levels. So what I'm interested in is seeing the next 4-hour test the high of this 4-hour. So pretty straightforward. I'm just going to go to the 10-minute and give you the range that I'm looking for. So we have this high here, and we have this high way up here. So this is a 40 pip range on the 10-minute. It looks a little bit big on the chart. However, what I'm expecting to see this week, at least to start off the week, I should say, is a nice corrective structure up into these levels. And within this range is where I'm going to be paying attention to the structure and how price reacts at certain levels. And going to be placing entries. I'm mainly looking to enter as it gets into this level. I don't necessarily think we're going to tap all the way back up here again. That's more of like, hey, if we break this, we're probably not going to continue down. We're probably going to come back up here. Yeah, so last week we had the entry right at this doji here. So stop losses at the entry. And yeah, I really don't think we're going to come all the way back up there. I think we will come up and make a wick, but it's not going to be anything too crazy. In fact, I actually moved this right here just to make that clean structural level. So honestly, anything around like 1806, 1808, that range is what I'm really looking for. So the original take profit from this sell entry was this low right here, which is what was hit, which is why we closed a vast majority of the trade Friday. As you can see, this is the 10-minute, so we closed that trade pretty much right before the market closed. We still have partials. So what I'm thinking is we're going to get some sort of respect from this area, and that will give us a nice push to this upside. And again, I know I'm kind of repeating myself here, but just to make it clear, as soon as we get up into this area, I'm going to be watching the low time frame. And as long as we get the right rejection and the right pressure, then I'm definitely going to be looking to add some positions here. The target is going to be this low right here, and possibly this low right here. That's an extra like 70 pips. I'll probably start looking to close 90% of the trade, assuming we get another entry right here. But close 90% around this 1780 level, and then maybe hold a little bit till we get down here, because I think what's going to happen in the long run is we are going to see this move down that we're shorting at the moment, and then I think we're going to come back up into these highs. So to the daily, we can see these highs haven't been reached yet, and what I'm seeing is if we throw a Fibonacci down the point, we got a lot of lines on the chart. Hold on. You can see the 0.618 Fibonacci of this move down is going to be pretty much right next to these highs. And it makes sense because if I draw a zone right starting at the fib and I draw it up to the line, you can see the only thing that has played in here is wicks. So that's what gives me the thought that once we come down here based off this heavy rejection, we're going to move down, we're going to grab some orders, and then we're going to slingshot up into these highs. From these highs, I think we're going to short possibly another massive short, something like this, down to these lows of like 1720. I know I'm getting a little bit ahead here. We're probably talking a couple weeks or like 2 weeks. But that's my overall outlook on what's going on. So I think we're going to come up here and just make a wick on the daily, nothing major, right? I don't think we're going to close up here. So to kind of reiterate on that, when we're making a wick on the daily, that means when we get up here, we're not going to spend a lot of time up here, which is one of the factors I keep in mind when I'm looking to enter. Because if we shoot up there really fast and then we start rejecting really fast, that makes me believe that we're just coming up here to make that wick and grab those orders, and we're going to start heading down soon. So that's kind of something I'm going to be looking for when price gets up here. It's how fast are we moving? Because if we're moving fast, we're just going to shoot up here and then we're going to shoot down. But yeah, so from there, I think we're going to move down here and then see that move to the upside to grab these orders, come to this level, and then a larger short to the downside down here. I know that's, this we're looking at, this arrow is the end of January, but we're looking at a couple weeks. But yeah, that's just definitely something I can see happening. And some of the people that I talk to see the exact same thing. So that's pretty much it for gold. Basically just looking for another short opportunity to take to the downside here. Once we get down here, there's no question about it, and looking for buys. There's a lot of orders right here. I just highlighted that wick. So that's what leads me to believe that we're actually going to come all the way down here. Second reason why, real quick, before we move on to the pound New Zealand dollar, if you'll notice, this candle does not have a wick. So there's orders right here that aren't fulfilled. So that leads me to believe that we are going to play in this area. I'm really hoping that we just tap like 1807. See these highs or the opens and closes. I think we're going to play right into this area right here and then fall over. So stop loss is going to be placed at the entry, which is above this level here. Probably like a 40, 50 pip stop loss, which is pretty good because we get an entry right here. We're talking about 300 pips to the downside. So a good risk to reward ratio with gold at the moment. I am aware we could make a double top. However, based off the pressure, I don't think we will. Gold doesn't like to make a lot of double tops. So like, for example, right here, we got this initial push down, and then we have a corrective structure pulled back, right? You could have thought, well, we're going to make a double top here. But gold, what it likes to do is have an impulse and then a kind of a smaller corrective and then a continuation. So like even right here, this is a little bit more crazy because of the wicks, but we have this push, right? And price is pulling back up. You might think, oh, we're going to come up and make a double top, but we just get that little corrective structure and then another push down, which this is probably almost 200 pips. And then even here, right? We push up again to these levels, which I believe we actually shorted this. Yeah, we did. I totally remember that. Came up this area, didn't make a double top, but we pulled close to it, and then we just completely dropped. So similar things going on here. I believe this is that initial drop, corrective structure drop, possibly around New York session Monday morning is when this will likely fall over. So definitely getting up early enough to watch that beforehand. That's it for gold. Let's move on to the pound New Zealand dollar. So we shorted this last week, got stopped in profit, which we'll get into. I think we're going to get another short opportunity. So yeah, let's get right into it. You have these daily levels marked. I'm actually going to pull it down to right here. This high of the previous week right here. As you can see why we're in this area, we got support here, then it flipped to resistance and we pulled back up, and now we're testing that area again. So what I like about this short opportunity, if we take a look at this line right here and everything above it, so it's very clear every time price comes into this area, we see rejection. And I'm actually going to move this down to right here, this high right here, because look what happened. We dumped, we pulled it all the way back up. We just barely stopped these people out. If there were shorts right here, like long swing shorts, barely tapped above them. And then we dumped. And this is actually when we initially shorted last week. The take profit was going to be down here. However, we got some pretty gnarly news that on this candle, we'll see in the 1 hour in a little bit, but this candle shot up extremely fast. So we moved the stop loss right above this high right here. And as you can see, that was taken out. So we got a little bit of profit there. And then we kind of turns our eyes away just to let it show us what it wants to do. And what it showed us is, well, you can see price pushed in, same thing happened. We start rejecting pretty sideways for 4 hours, right? So let me go to the 1 hour. As you can see, this massive news candle. So actually, let me go to 30 minutes. Yeah, it's beautiful. So look what happened here as we approach these levels. Rejection, tons of wicks, right? This candle at one point was a huge bullish candle, and then it closed way down here. So massive rejection, sideways movement, rejection. So just for the ease of the eyes, I'm going to draw a box. And let me show you what I'm seeing. So price comes into this area and we start to make this range, right? We have the high right here, and then we have this low. And we range and we get rejection. And then we get this huge push up, but we get an immediate push back down. And then what happens? We range, we can't break the low. We come back up, test the high, reject, and then we dump. And what happens is we actually break the low. That's important. Now what happens? We pull all the way back up to this level. Once again, next candle, dump. We break that low. Now we've slowly crept back. We actually tapped into these highs one more time. And one thing I want to note here is this 10-minute candle doesn't have a wick. That means there's orders just above this candle that haven't been fulfilled. and they were then fulfilled from this wick right here, this candle. And look what happens after all those orders are filled, price dumps, and that's how the market closes out the day Friday. With that being said, let me go back. Let me draw this line again. I'm actually going to put it at 1.967 flat. Let me go to the weekly. Based off of how this closed in the blue, I believe we are going to easily come up and make a wick. I would expect price to come up to 1.967, back to those highs of that box that I was just showing you. Once we get to that area, I want to see sell orders being fulfilled. And on the small time frame, I want to see movement starting to pick up and the sell pressure start to pick up. And as long as we can get those confirmations, then we're going to be entering at 1.967. If we go above it, same analogy applies. In my eyes, if this next weekly candle is going to be bearish, we won't really break above this high. So let's look at this candle right here, this weekly candle. See how we get a huge push up in rejection. And then the following week, what happened? We made a wick and then we dumped. That's what I'm looking to see here. I want to see a wick come up, stay within this previous week's high, right? Most likely right here, just in this area, and then a dump down to this weekly low and possibly continue down just how this did. It all depends, but we're definitely going to take profit right here because that's a solid 300 pips, sorry. It's a solid 300 pips. So definitely take the money off the table at that point and look for more opportunities. So simple terms, pound, New Zealand dollar, I'm simply just waiting for price to get in between these levels again. And then as soon as it's in between these levels, I'm just watching the lower time frame pressure, and then we'll be placing sell entries. It's almost guaranteed to happen. You just got to wait for it to come up and get the right price. Because that's 40 to 50 pips higher than what it's at right now. So we definitely just want to wait for that to happen. Obviously, I'm aware that price could break this high. And if price breaks this high, and I'm talking about a strong 4-hour candle close, like very specific, a 4-hour candle close strong. I'm not talking about just closed like 1 pip above it. I mean, we closed 20, 30 pips above it. If that happens, then I'm no longer looking to short this. But I don't think that's going to happen. I just wanted to put that out there. I'm aware of it. Everyone watching this should be aware of it, that if price does break this high, we're probably not going to short. But I don't think that'll happen. And only time will tell. We'll watch and see what happens when the market gets in here. And that's a big thing too, is waiting, because like if price is going to break that high, then obviously it's going to get in here. And if it's not going to break that high, it's probably just at least going to pull back to make that wick. So either way, price is coming in here. And I would really like to see, let me get a candle here, or an arrow. I'd really like to see a candle just come above all of these. Right now the market's open just above this high. I won't be surprised if we tap this high or this high, right? They're pretty much exactly the same. That wouldn't make me doubt anything, because if you take a look here, this pin bar at once was a huge bullish candle and then it closed bearish. Same right here, huge bullish candle closed with a massive wick. So if we get in here and we start pushing up, it doesn't affect me. Just sit tight, sit logically, wait for it to close, because if it closes back down here, that's pretty much a complete guarantee that the price is going to go down. So then you can, increase your risk, or however you want to do that. Because in trading, like, there comes times where price does things like right here. And let's say like let's just speculate right now. Let's say price comes up here, and then let's say we have this a 1 hour candle that's just fully bullish. I'm talking like even spikes above this by a few pips. You come 1 hour candle. You come back after that hour has closed and it's all the way back down here. That's almost a guarantee. Like the market is literally saying, hey, I tried to break that, but I can't. We're going to go down now. So when it gets to that point where it's almost guaranteed, plus if you feel it intuitively, then if the market's gonna, I've been telling this a lot lately, if the market's gonna go, it's gonna go, right? Like if it's telling you, hey, if the market's saying, hey, look at my price action, I'm about to drop, it's gonna drop, whether you risk 1%, 2%, 5%, 10%, whatever you want to do. The market's gonna go, it's gonna go. So you might as well take advantage of it. But obviously play within your own risk rules, right? You should have a risk system basically, so you know what you're going to risk and for how many trades. That's what I have. I write down every week what trades I'm going to take, how much money I'm going to risk on all the trades, things like that. So that's it for pound New Zealand dollar. Now we have pound Aussie, and we have something similar going on here. So all in all, let me just delete this stuff. All in all, I want to see this level tapped, and I'm going to throw the fib on there, and you can see it's pretty much the exact same thing as the fib 2, right? So that's what I want to see, is price come up to this area. Now, based off of the daily, I'm going to mark the previous daily high, and then I'm going to go in the 4 hour, and then see how these wicks are here, how they're even. I'm just going to make a line there, but I'm going to extend it to the left. And then I'm going to draw a box just to highlight what I'm talking about. Price came in here. This is where it was created. Price came back in there, spiked above it, and it fell pretty heavily. We pushed back up, and one sec, sorry. Rejected, and we slowly pushed back down. In my opinion, I think we are going to see, let me just draw this stuff, right? I think what's going to happen is we're going to come up into this area, push down, tap these people out. I think we're going to wick slightly under them, and then we're going to explode up to those highs of 1.8723 for that Fibonacci level. From here, I don't know, maybe we drop down to these lows, maybe we break through it. We'll cross that bridge when the time comes. But as of right now, this is my outlook on pound Aussie. It's pretty clear to me. That being shown, this move down is almost 200 pips. This move up is 300 pips. So both sides can be played here. So let's do this. We'll go to the 30-minute. What I'm looking for, if I'm going to short this, the only way possible that I'm going to actually press that sell button is if we're up into this area and closer to the top of it. If price can't get back up here and start rejecting as it did here, or start giving us this sort of structure, I'm not going to press sell. I would just wait for the buys down here. But I do think we are going to be able to come back up to that level just based off of how the weekly needs to form a wick. And right now there's no wick whatsoever. So what I'm expecting is these highs to be taken out. Right, I think we're going to come up above these highs. We're going to tap into the zone, either the bottom of it, the top of it. Doesn't fully matter to me, but as soon as we're in here, that's when I'll start actually looking to press that sell button, because pound Aussie, excuse me, likes to make those double tops. So we can see we have a huge push up here. That was the same on the pound New Zealand dollar. We've crept up. Now we're coming back down. We're going to creep up again. I think we're going to drop. We're going to take these people out right here. Take them out. Want you to notice something? There's no wick down here on that big candle. Just saying. Fulfill those orders and then make our continuation run towards that Fibonacci area, which is also that structure level right there. As you can see, we kind of already did this pattern right here on a larger level. You can see we came up here, right? But now I think we're gonna get the same thing again, right? I'm not expecting it to like play up here that much. So what I mean by that really is if price comes up here and starts hanging out, maybe it looks a little bullish, maybe pops above here, it's going to be kind of iffy if I'm going to enter short or not, because this could just continue right up here. If we're going to get a short, I don't think we're going to waste a lot of time. Similar to the gold, I don't think we're going to waste a lot of time when we pull back up. So that's really what I'm looking for, is price to just to get into these levels right here, and then we can look for a sell opportunity down here, and then we can buy back to the upside. So just a very quick rundown, kind of a zoomed out 1 hour plan. This is what I'm seeing for gold. Pull up, drop. On New Zealand dollar already making its way up. So that'll be interesting. We might get an entry before London. So keep an eyes on that. Pull up, drop. And pound Aussie, same thing, man. Pull up here, drop. Once we get down here, buy. So depending on how fast the pound Aussie wants to move this week, we might get both of these this week, which would be really cool. Hopefully we can do that. But we'll see what happens. That's all I got. I don't know if Quincy or Sean or anyone wants to hop on. I can pass over the host.
I can hop on real quick.
All right, all right. Participants, passing it over to Quincy. Stop.
Let me get my screen right, y'all. All right. Happy Sunday, everybody. It's TLE time. Time for the indices. Now, let's get straight to it. Right now, I'm on the daily. I'm looking at US30 right now. And just going off of the theme of observing price action and trusting what we see. As we see here, just keeping with the theme of corrective structure, this is what I see right here. Up top right here around this yellow line right here, I see some corrective structure on a large scale, and it's coming. I have the arc designed as such because this is just what I see. Now, I'm not saying that it's about to crash all the way down here to 20,000 or something. We don't need no Armageddon or anything like that. We are just trading the markets for what we see here. But, you know, we're going to be ready, making sure that our channels are ready to go, making sure our structure is ready to rock. Now, I'm going to get down in a 4 hour here. Just so you can see what we're looking at. As we see here, we got just a bit of, I would say a lot of consolidation that's really about to happen very soon. I expect it's going to happen before New Year's. So we might get one or two big moves. I'd say one or two more drops. And we're going to have a lot of consolidation around here or potentially down here somewhere. So we'll see if I need to bring down some of these levels, but it all depends on whether or not we're going to get back up here. Because as we look at what happened last week, we had a nice fall from down here. Even though we didn't catch this in the group, we were ready for it. We'll be ready for some moves this week. Most likely what I see here, something very similar. I expect some support happening here. Nice bounce back up here somewhere. And then a nice fall. A big fall. But we got to be patient because you have to be ready for the momentum when the juice starts rolling. Because as we know, when it comes to these major equities, once the volume kicks in, that's when a lot of the indecision and inexperience will play for a lot of retail traders. So what we do is we manage our trades around institutionally where the big boys and gals really want to get their money. So what we do is we look for the swings and we are patient. Now, over the next 2 weeks, should be good for scalpers, but there should be at least a few moves that we can take advantage of for folks that want to maximize their ROI. Okay. So let's just look at hourly here. As we see here, I can drag this out here. We got a nice bearish alley kicking in right here. Now the deal is I'm expecting some type of bounce to happen over the next few hours. We should challenge somewhere near 36,000, maybe 35,900 once again. And then once we settle in, we should be able to ride for a nice move somewhere around here, depending on how we settle here. So just using some basic, geometry here, right along this transversal right here, we're just going to keep it simple and be very patient for our rejection. Because once we climb back up here, it's just a matter of time before that sniper entry gets us where we want to go. And where we want to go, we want to take this down as far as we can. So when I kick it back to a weekly, back to that weekly, expand it a bit. We are still arching for more liquidity up here. We are still reaching for more liquidity, but as you see, the angle is flattening out laterally. So since we are flattening out so laterally, just like we were mentioning in our videos the last 2 weeks, expect more consolidation type of moves within the next quarter. And then depending on what we see with COVID, we are going to get down here somewhere. If we can get into the 37K and obliterate this bearish market, so be it. But right now, price action wise, I don't see it. And if we want to correlate it with others, we can do so. So let's take a look at the little brother. Let's look at SPX. Now, as we see here, the motion is a little bit cleaner, but the picture is still relatively similar. We have a little bit more bullish in nature, but the angle of demand is very, very weak right now. The way I see it, just like Tyler was mentioning, when you see price action start to fail in one direction, you have to observe what that price action is doing so you can manage your trades accordingly. And as we see right here, we are getting extremely lateral. So let me use this tool right here to make a box. This type of rejection right here on a broad scale, I'm expecting a similar arc that we just showed with Dow Jones, I expect something similar with SPX. And we're going to test this line right here. We will test it. And as it fails, we should be ready for some nice moves in January for SPX. So once we get through this New Year's volatility, once we operate very cleanly here, we should be golden for folks that are operating with smaller accounts that might not have enough to operate with US30 or say DAX 40. And yes, it's a DAX 40. It used to be the DAX 30. But if anybody was paying attention with what we were talking about in October, November, and December of 2020, we already knew that the DAX was going to be expanded. We knew that it was going to expand to 40 blue chip companies for Germany. We were ready. And good thing is we can be ready even for these European markets as well. It's just a matter of being patient with the price action that we see. Here's a move that I believe that we can catch. Just looking at the shape here, just how we've rejected 15.9K right here. It looks like if we can get one more pop up here, we can have a nice, I'd say 600 to 800 point move to the downside for DAX 40 here. So if we're patient, we can get some really good pips here, a lot of them, if we're very patient. Because if we pay attention what is actually happening all across the world with Omicron, it's very likely that shorts will make a lot of folks a great deal of money. So I say, let's be ready for it. Let's check out Nasdaq. Okay. Let's go back to a 4-hour. Okay. I'll delete this for a moment here. Now, as we see here, similar deal happening with SPX. But if you take a look at NAS, our Nasdaq is still bullish, but again, we are flattening. We are now moving laterally. The price action that we're seeing right now is screaming to us, we are getting exhausted. We are running out of liquidity to keep this up here. So we're going to have to drop just to breathe a little bit. Market structure warrants that. So to be ready for it, we look at the price action. Now, as we see here, I was setting up somewhat of a symmetrical triangle just to see how the breakdown would occur. And we would have been ready for a buy if we wanted to buy here. But just seeing how it challenged right up here, right here at about 16.4 to 16.500, it seems that we are exhausted. So we can make another box similar to how we just did before. So if we take a look at this zone right here, we are moving so laterally, we have to expect shorts are going to be ruling here. So depending on what type of volatility we see, I doubt we're going to see anything challenge up here. And if it does challenge up here, bull time. But from what I see right here, we'll probably get one or two more pumps up, some major candles here, and then we're going to drop. So what I'm seeing really is somewhere at about here. Let's get that risk right, because we don't really risk too much when it comes to these indices. We go for the snipes. We get in where we can fit in. It's how we protect the bag as we grow it. So this is really what I'm seeing right here. Now, if we challenge up here, we'll still be ready. But right now, this is what I see just based upon the fact that we are having too much trouble getting past this with the type of angle of supply that we were ranging for. And now that the ranging is subsiding, and now we have more of an angle of demand kicking in, well, once the juice runs out, we're going to be ready. And just as a final warning for everybody, when it comes to indices, you really have to be careful in the holiday season, okay? I'll delete this arc for one moment. You really got to be careful when it comes to these holiday seasons, because the volume will decrease. It's inevitable. Many folks are cashing out during this time, so the liquidity is going to be less volatile. The amount of people just being indecisive with their trades will increase. It is what it is. Folks are going to still be hunting for their trades during this time, after many of the few successful traders will do their thing. So please trade with caution. Understand your risk. Understand what you want to manage per trade. Understand what you're willing to walk away with. Understand your exit points, because with indices, it is very, very easy to get greedy. Okay, let's go back to a shorter time frame here. Let's go to a 4-hour. Okay, now let's take a look here. I'll show you why you don't have to be greedy with indices. If we just take a look here at this move that we're plotting on, even though this is ideal, this is about, I would have this as a 20-to-1, because I'm not really risking any more than 500 pips, meaning 50 points on a trade, because of where I like to enter. I don't really want to risk a lot as it is. So like Tyler was speaking about operating with these wicks, we would look for wicks somewhere around this range that we're Xing out here. It's all about getting in where we can minimize our risk and minimize our exposure. So as soon as I can get some of those wicks that I'm looking for, that's when we're going to place our orders and just ride it out so the gravy train doesn't let us anymore. It's very simple, but it's really about being patient, not being scared of what you see when your broker is operating those candles or bars or whatever your broker displays when you're operating your trades. It's really a matter of setting up your system so that you can trust yourself while managing your trades from moment to moment. And it takes time, but it can be done so. Just like we have spoken about this subject for a few weeks now, there's always an opportunity in these markets. So before you manage your trades, you gotta learn to manage yourself. And I think I can leave it out on that as we get ready for this 2022. Learn to manage yourself and your trades will take care of themselves, y'all.
Yes, sir. All right. That pretty much sums it up. So if you want to transfer the host to me, I will stop the recording and everything. Actually, it doesn't even. Yeah, I think it does matter because I gotta end the meeting. All right, cool.
Sure.